Good morning, this is Larry Edelson for my Uncommon Wisdom weekly video market update for Thursday, June 23rd. Thus far this week we've seen the markets pretty much betwixt and between, with no changes in the short-term trend and certainly no changes in the long-term trend. Right now the markets are largely digesting the crisis in Greece. Greece, as you know, is having a sovereign debt crisis which will give way to a contagion and to many problems that lie ahead for the euro region and for the euro currency, and ultimately migrate to the United States, which will have its own sovereign debt crisis, which will be the mother of all sovereign debt crises. Right now, though, the markets are, again, digesting what's happening there. So let's go immediately to the charts and take a look at the action so far this week. I'm calling up the gold chart here. Just give me a second. It's a little bit stuck. There we go. Okay, as you can see, gold is climbing this support resistance line here, trying to penetrate above it, but not really having a good time of it. And as many would be inclined to think, the sovereign debt crisis in Europe should give birth to another rally in gold. But it's not quite the time yet for that breakaway rally in gold. Cyclically and seasonally, there's some weakness showing up as we head into the July-August time period for gold, and I believe that's why this resistance line here, which gold broke below previously, is now acting as resistance. I expect, yeah, okay, we could get up to 1555, but gold should ideally roll over down to the 1475 and even 1425 level during the summer months, possibly even a little bit lower. That's not saying you should go out and short the heck out of gold. I do not recommend that. I do recommend using any upcoming weakness in gold to accumulate some very good positions in both physical gold, derivative gold, ETFs, and of course gold miners, because the next leg up in gold, which will probably not begin until later this fall, will be the one that takes gold to $2,100, even $2,300 an ounce. And remember, keep in mind the long term for gold is much, much, much higher. Having said that, let's now go take a look at silver. Silver, I remain bearish. It's trying to rally a little bit like gold. However, I expect that rally and the recent strength in silver to give way to another leg down. I'm targeting the $28 level over the summer months in silver, and we'll probably get there a lot sooner rather than later. Quite frankly, it could happen very quickly. Keep in mind also, silver is an industrial metal, more so than a monetary metal. So as economic growth in the United States and Europe takes a hit, silver consumption from an industrial point of view will also likely take a hit. Okay, and now let's take a look at the dollar index. Dollar index pretty much trading sideways. One day we see a little bit of a rally in the dollar, the next day it sells off a little bit. It's basically succumbing to its long-term bear market, and in the short term trying to rally because the euro has so many problems. Net, that means the dollar right now is really going sideways with a very slight upward bias in the short term. Next, the Dow Industrials. We've seen some further downside in the Dow and then a rally, which is really a bounce, relieving some oversold conditions from before. I expect this rally to meet considerable resistance at the 12,300 level, even assuming that it can get there, and then probably roll over. I am targeting a test of 11.5 at the minimum over the next month or so in the Dow, and then we'll have to see what happens from there. Long term, I remain bullish on the Dow Industrials, looking to buy it as it is reflated higher by monetization both by the European Central Bank and the Federal Reserve as QE 3 and 4 come into play down the road. That's it for this week's update. Stay tuned and have a good weekend. This is Larry.